Earlier this week, it was announced that officials in Washington, D.C. are considering implementation of a 50-year mortgage term as a way to address the rising housing affordability issues that we're having here in the U.S. I wanted to spend just a little bit of time speaking with you and sharing my perspective as a mortgage advisor and realtor on what this means to prospective buyers and how this might impact the housing market for the foreseeable future if, in fact, this is implemented. So, right out of the box, let's talk about whether or not this benefits the consumer. Quick answer is maybe, or it depends. Will a consumer have lower payments with a 50-year mortgage over a 30-year mortgage? Quick answer is yes. If you have an additional 20 years to pay for something, then all things being equal, that monthly payment will in fact be lower. So that in and of itself is a net benefit to the to the home buyer. This also helps realtors because you'll be able to sell more homes, and it will help home builders because they'll be able to expand and increase their inventory and be able to drive revenue in that regard. Some of the initial downsides that I see are there's several. There's several blind spots that I see that can impact the buyer and even the realtor. One is there will be a much slower increase in home equity for the buyer, and home equity is really what it's all about when you purchase a home. You want to be able to see that investment grow and to be able to use that equity in ways that fund other aspects of your life, be it college tuition, additions to your home, vacation, starting a small business, whatever. If in fact the change is made to a 50-year loan, that increase in equity is going to be much slower because there will be a significant amount of interest paid at the very beginning of the loan, and it'll take it a while to get into a positive equity position. For a realtor, the downsides would be, I believe, extended sales cycles for clients. Right now, I believe that the average retention period for a home is somewhere between 7 and 10 years for the average homeowner. You can reasonably expect that to change and to become higher if, in fact, customers do not have sufficient equity to move from a home during that same time frame. So that customer that you were perhaps selling two and a half to three homes to over the course of a 10 to 15 year period, that may become one. And so that will be significant. Another potential blind spot that I see as it relates to buyers and realtors is that this will bring about increased competition for homes. And if your market, I'm here in Charlotte, North Carolina, serving both Carolinas, but if your specific market, if your specific metro area is currently a buyer's market, I could easily see it pivoting to becoming a seller's market, where more competition would be coming in because of an increase in prospective buyers who can afford a property, which would in turn, you guessed it, drive up home prices. So there's a little bit of an offset there. As it relates to builders, I believe that this would allow national builders to scale and to actually increase prices on homes because of that increased demand from buyers. The price will not go down. The price will not go down on a home simply because there are 50-year mortgages being offered. You have to look at who the authors are of this. This is not a political statement. It is not intended to be so, and I hope that you don't take it this way. But you have to look at who the authors are and what they stand to gain by implementing such a policy. The CFPB has, since I think about 2012 or so, 2013 maybe, they've been responsible for establishing the terms for what is considered a standard mortgage. And 30 years is the number that they've come up with. Now, if you followed along, you know that the CFPB is under threat to be eliminated. So perhaps that rulemaking ability will transition from the CFPB to another agency or to another branch of government, just depending on how things shake out. Um, so can it be done? Absolutely, it can be done. But please know that there are some perils that are associated with it. And probably the number one thing that consumers should be considerate of is that the additional interest that you would pay on a 50-year loan over the life of the loan. I'll come back and do a separate video on that, just showing a couple of housing samples at some different price points and what the interest would be like for a 50-year loan versus a traditional 30-year. Regardless of what you want to do, make sure that you have a mortgage advisor who is working for you, who is representing you. Whether you're purchasing an existing home or whether you're purchasing new construction, do yourself a favor and hire a third party, independent fiduciary mortgage advisor, a mortgage broker, to represent you at the negotiating table to make sure that you get the best deal. My contact info is in the is in my bio. I would love to hear from you. And if you'd like to discuss your specific mortgage or real estate needs, don't hesitate to reach out. Thanks, and be on the lookout for some additional updates on this topic.